Well, it's going to be one of those casual videos. I don't want to call this a rant. It's going to be an educational rant. But what we're going to be going into is there going to be a stock market crash in 2020? So real quick, if you do not know, I am Nick. If you like, you could subscribe to this channel. I go into like this type of stuff, investing and all that. That would be fantastic. I definitely appreciate it. And I am uploading this on a Tuesday, unlike my sign over here that I upload every Monday and Wednesday. I'm doing this because I was out of town for my brother's birthday. We had a lot of fun, but we're sticking with that schedule. So like I said, this is going to be a little bit of a rant going over possibly a stock market crash, a stock market correction, because I feel like not many are like focusing on these huge concerns. I mean, well, correction, I feel like they know they're there, but they don't want to believe they exist or simply don't care enough. You know, so recently we are seeing like concerning profit levels, all these different types of talks out there. Could be linked to greed, and that's going to be involved with like the stock market cycle. You know, there's a cycle, goes through every recession, every boom, every bust. We're going to go into that in like a minute. But honestly, in the short term, with including all of these concerns, there's a bunch of issues out there which we're going to touch on. And you know, throughout my videos on my channel, I go through some of them, and of course there's a bunch of other videos and channels out there on YouTube that we could all learn from. I think they're all great. However, for that short term, I'm not necessarily bearish. You know, people are concerning stock market crash, stock market correction, bad things happening. However, that doesn't necessarily mean we're going to crash tomorrow. I feel like a lot of people think like just because there are these ridiculous things, it's bound to happen like real soon. That's not necessarily true. Now, from my personal experience, I've been investing for 6 years in the stock market. Now, I'm no professional. I'm not considering myself one, but I don't believe that I'm a beginner. So I made mistakes, and I learned from them. Now, when I say short term, it could mean like by the end of the year, like 2019 could be a pretty good year actually. Now, I'm not saying that this is absolutely correct. I'm not saying I'll be right. I probably won't be right. You know, I'm not going to specifically say, oh, October 18th, 2020, the stock market's going to crash. I mean, if it does on that date, I'm going to come back to this video and say, I told you so. So mark your calendars and come back. But if it doesn't happen, you could come back and leave me a dislike, a thumbs down, whatever you guys want. So looking at the stock market cycle, I have a couple to show you, but this is the basic cycle that the stock market goes through every cycle, every recession, like we said before. So this is the basic movement that a market could see. Starts with optimism, gets up to excitement, thrill, and of course tops out at euphoria. And then of course bottoms out, mostly due to fear, panic, and then finally gets to that level. So that was one chart. Another one that I really like is actually this one. So you could see the stealth phase. Ninjas, smart money comes in from hedge fund managers, and it starts, you know, rebounding from, let's say, the previous recession. Then gets into the, I thought that said awesomeness, awareness phase. So this is where institutional investors get involved with. You could see first sell-off, everything like that. And then the media grabs this attention. And this is where the public gets involved. Public always screws things up. Anyway, this goes in after media attention, goes into enthusiasm, goes eventually into greed, delusion, and then euphoria at the very, very tippy top. Now, that's the upward momentum. This is actually very similar, strangely, to something else that we've recently went through. Of course, at the very top, we have euphoria. There's like no common sense, nothing makes sense, all confusion, no one cares. And then people go into denial when it finally starts crashing, correcting, whatever you'd like to call it. People believe like, oh, this is just a, small correction, it's going to rebound, whatever. And then fear sets in, eventually down to despair at the very bottom. So I remember people have been talking about the next stock market crash for like years now. When I first got involved with it, maybe around like 2012, 2013, even 2014, like, oh, next stock market's going to happen. And, being a beginner, I believe these people. I'm like, all right, I thought it was so simple. I'm like, all right, it's going to crash by the end of the year. January is going to be down, but by the new year, it's going to rebound and it's going to go up and I'm going to make money. That's not what happened. And if you waited back then when they started talking about it, like 2015, we're in 2019. It's been years and the stock market has been climbing ever since. So that's why timing the market you really can't win in that game. Even the professionals can't do that. So going back to this chart, I feel like we might be entering this greed phase just because it's interesting, because the yield curve, a lot of people have been talking about it, has just inverted. So just to keep it super simple, because there are just so much detailed things that go into the actual yield curve. However, what it basically means is that short-term bonds are paying more interest than long-term bonds, which is not normal whatsoever. So what that basically means is people are very weary of the future of the economy. Why would they buy a bond, especially if it's paying lower than a shorter-term bond, if they're not sure what's going to happen in a few years, 5 years, even 10 years? And it's very low. It's paying like, around maybe 3% right now? So, especially with inflation, average inflation could be maybe 2%. So that's barely hitting inflation. And if inflation goes higher than that, which is definitely possible, people are like, another concern, could be panicking with that. What if inflation goes to like 5%? When you're paying a 10-year bond of 3%, you're losing money at that point. Previous recessions, this kind of happened before that. The yield curve inverted, and the average could be maybe 12 to 18 months on average. After that, a stock market crashed. So this is from Fred. You could actually go to their website. You could definitely play around with their charts. It's actually pretty cool. You could look at their different interest rates. You could look at GDP. You could look at unemployment and all that good stuff. And it just has a bunch of charts and graphs. But you can see every time it went below zero, when it went negative, those gray areas depict a recession. And every time it went below, a recession happened shortly afterwards. This shows you the past 5 recessions, and there are a lot more recessions before all this. So, this isn't like a sure thing. However, it is definitely concerning. So you can see in the 80s, there were actually 2 recessions. In the early 90s, there was an inversion, and then shortly after a recession. Around 2000, 2001, the dot-com bubble, there was an inversion, and then stock market crashed there. And of course, the most recent one, the 2008 stock market crash, the Great Recession, there was a slight inversion there, and again, it crashed afterwards. So this is where the idea comes from of, could the stock market crash in 2020, because that's a year or a year and a half from now. However, something very interesting is that going back to that stock market cycle, we might be in the greed zone, is because the stock market usually does very well, like between the yield curve inversion versus the actual peak. Again, that's my opinion, but I feel like that could be a greedy type of move. Like if you're expecting a recession to happen in the next year or two, you're trying to basically milk all the dollars you possibly can in the short term just because you can, rather than being safe with it, paying off debt, storing cash, or whatever. Starting with the 80s, like we saw from that Fred chart, the economy suffered a double whammy of 2 recessions in this period. There was one during the first 6 months of 1980. The second lasted 16 months from July 1981 to November 1982. The Fed caused the recession by raising interest rates to combat inflation. Interesting. Now that's interesting because we have been recently raising interest rates. I mean, we're not necessarily focused on inflation per se. However, that doesn't mean that it's not going to be a problem in the near future. Heck, we're even questioning, the market's even questioning that there might be rate cuts. Like, we were raising it, now we're kind of steady right now, which surprised some people because we were raising that rate too fast. Now we're expecting that rate to go back down to 0. So similar to the 80s, it could be another Fed-originated market crash. Now, real quick, speaking of stock market crash, okay, anyway, just had to put that out there. But now, the average bear market, when the market crashes and how long it stays crashed, the average is around a year. And the average bull market could be approximately several years. Some say 6, 7, could be 8, 9, even around 10 years. Now, just because we, since 2009 to 2019, that's 10 years. Just because we're at that time period does not mean, just because we're overdue for a stock market crash does not mean we're going to just crash for the heck of it. Now, I kind of relate this to flipping a coin. You could flip a coin 10 times and it can land on heads. So the next time, reverting back to the mean everything does, the stock market, basically anything, the economy, you would expect the next flip would be tails. However, what a lot of people don't understand is that every flip of that coin is still 50-50 chance. Now, I'm not saying the stock market crashing is a 50-50 chance, but just because it's been a while, it's not just going to happen because it has to happen. At that point, it kind of becomes a self-fulfilling prophecy. People are expecting the stock market to happen, and then we kind of make it happen. We become fearful and we panic due to our own ways, in a way. But in the end, yes, there is reversion back to the mean. If the stock market or basically anything keeps going higher, 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 it doesn't make sense. There's a mean and it goes back down to that. At the same time, it cannot be sold, becomes oversold and it's just going to keep going down. No, it will revert back up as well. Now we are continuously getting new numbers of profits, outlooks, and the slowing economy. Heck, even the Fed has mentioned, out of their mouth and in their words, has mentioned the economy could be and is slowing. Yet, looking at the chart of the S&P 500 index, there was a correction, but then it's starting to rebound. Despite all these economic numbers, these concerns, and all this stuff, it continues to go back up. And that is why I believe there is still more upside. It doesn't matter what's going on. People could be lying about all these numbers, about unemployment, about trade wars. They continuously tell us trade wars are going great. But then they're not. It's quite incredible. It's probably going to take longer than we expect, mostly because it's already taking longer than we expected. If trade wars weren't enough, there's also debt on everyone's plate. Huge stacks of debt on the U.S. government, corporations, and personally, every single individual, or most individuals in America, and probably throughout the world, are loaded up with debt. And it's terrifying. That's why I don't really think, I could be wrong, we could all be wrong, no one knows. However, that's why I really don't think the next recession is going to be the average 1-year bear market. Because previously, we rebounded because there was no debt. When you rebound, there's great times, there's nothing to pay back and you just gain profits. You know, you graduate college, you want to start your own life and everything, but you have debt holding you back. It's going to sneak up on you. You know, like, you might get away from it for like a few years, even decades. Look at the U.S. government right now. The debt's like, what, $22 trillion? That's just not going to go on forever. And that's just another concern. On top of another concern. On top of another concern. And I feel like we're just pushing all this stuff away. Times are still great and everything. And there's just huge numbers out there that we can only push away so much. And it could be much longer than a year. And that's what's concerning, which I want to capitalize on right now. If you guys made it this far, I appreciate it. Thank you so much. Again, I guess it did turn into kind of a bit of a rant. But I appreciate it. If you guys are interested in this stuff, you know, like, it's important. So, thumbs up if you made it this far. I appreciate it a lot. But this could affect all of our lives. Because it could be affecting our prices for food. It could be affecting our gas prices. Like, prices could double. And that affects everyone. You know, and it's terrifying because people are like, we've been in a good economy for like 10 years now. Really no issues. You know, people are getting, supposedly we're getting jobs. You know, unemployment rate is low. That's in a good economy, and people are considered to be struggling because the amount of debts, you know, they can't pay off anything. They're living paycheck to paycheck in a good economy. Imagine if there's a bad economy. That's terrifying. Like, they're struggling to pay for things now. Imagine if, like, I don't know, food increases, gas increases. If you have any type of variable interest rate for your mortgage, for your car, if that shoots up through the roof, you can no longer afford to pay those things, including with student loans. So for those of you with student loans out there and have like variable interest rates, I mean, I'm no professional with that. I would definitely try to either pay it off as fast as possible or try to get some type of like fixed interest rate, because, you know, if it jumps to a ridiculous, like in, I believe it was 70s, 80s maybe, interest rates were like 15%. I mean, credit cards are at that now, but like for an average interest rate would be a destruction to so many people. And those are some of the concerns. They're big, and I feel like we kind of have to talk about it. Like, we can't just push it off like previous generations basically have, and we can no longer do that. There are huge concerns, huge issues, and Social Security is a Ponzi scheme. But quick story, it's basically a Ponzi scheme. Social Security, if you're like my age, millennials, or, you know, younger generation, honestly, don't even expect Social Security to be there. It's a Ponzi scheme. And what that basically means is, for younger generations working, they're paying into Social Security. That money is then going out to retired people. That's what a Ponzi scheme is. It's that money coming in is money going out. That's what Bernie Madoff did. He got arrested for that. And we're doing that. So I don't know how long that went on for, but it, like, a lot of these things have been on my mind. Now, long term, like, I'm not really worried, like, because I still have like decades upon decades to build my wealth. However, in the short term, it's concerning. And that's why I wanted to rant about this for a little bit. Mostly because it's my own channel. I can kind of do whatever I want. So that's why I did this video. So, again, if you made it this far, guys, maybe this opened your mind a bit. If you learned anything from it, let me know in the comments. If you have any other concerns, do you see any other issues that we're not even looking at yet? Or, you know, do you think we're in the delusional phase yet? Do you think we're in the euphoria phase? Do you think we're not in a bubble at all? Let me know what you guys think, guys. So, I appreciate it. Thank you so much for watching. I'll stop talking now. And I'll see you guys in the next one.